Copy Trades! I wanted to do a video analysis update of Shopify, as well as Invitation Homes, Planet Fitness, Tesla, and Bitcoin. So, Shopify is not currently on the long straddle screener right now, but I did see it when Shopify was just below 61 today. The institutions were buying the 61 strike straddle on Shopify. We can also see Planet Fitness and Invitation Homes right here as well. So we'll get into Shopify's future. Let's look at the past real quick for Shopify Shop. At the 78.6% retracement of a wave 1 that is subdivided into 5 waves. 23.663 is a pick the low wave 2 that sets up a wave 3 beyond 176. If it holds, Shopify has a beta of 1.91. So it is almost twice as volatile as the S&P 500. For high beta, I take half the position size versus value stocks. So that's always a good idea for me to take bigger positions in things that have less likelihood of going to splat. And of course, Shopify, a lot of people might think that Shopify is going to splat right now. And this is one of the cool things about Elliott wave theory is that everyone talks about buy low and sell high. But I promise you, you can scour the globe. You can scour the globe for buy low, sell high. And the only two technical forms of technical analysis that are gonna do that are Elliott wave theory and Wyckoff. Now, on that note, since I said that, real quick, oh man, I didn't even mean to play in the QQQ chart. I haven't touched this in quite a bit, but I just wanted to show on that note that the love affair with the bar chart trend seeker indicator. I don't think it's hyperbole. I mean, look at this. The weekly trend seeker indicator on the NASDAQ. Do you really know anyone who's done better than this? Buy major top call in January of 2022, major bottom call in March of 2023, in really guiding this rally pretty smoothly. So this claims to use volatility, time, and yes, Elliott wave in its calculations. No surprise. I just wanted to say that on the note that besides Wyckoff and besides Elliott wave theory, that might be the only exception to the statement that a lot of people talk about: buy low, sell high, right? But what happens? When the stock actually does hit a low, it's not very popular unless it's being looked at by an Elliott wave theorist or a practitioner of Richard Wyckoff. So I am part of the former, but I understand the principles of the latter. Some very interesting things. A lot of people think, I have conspiracies. You should read what Richard Wyckoff and W.D. Gannon thought 100 years before me. It would make me look like the same person in the room. Let's look at this for Shopify. Wave 1, Wave 2, because, at least I have these option screeners to look at. And I can say, hey, look, you can see they're buying straddles on Invitation Homes and Planet Fitness. I've looked at the screener every day for 2 or 3 years. You don't just see these types of names pop up unless the institutions are really expecting a move. So Shopify was on that intraday. Sometimes there are benefits of looking at that intraday. So anyway, back to Shopify. Wave 1, Wave 2, Wave 3. Look at this RSI. Wave 1, Wave 2, Wave 3 makes the highest high. Shallow Wave 4 correction in a Wave 5 that ends with momentum divergence. Very clean. Then just like I said, in December 22, bang, we did hold above 23.63. And I believe this was a Wave 1 and a Wave 2. So yes, I also believe this is another Wave 1 and another Wave 2. Before I get into the long-term picture, and yes, the way too wide invalidation is 45.50. That's way too wide. But Shopify does have an extremely high beta. And above that, 176.69 is the minimum target. The real also minimum target is the length of wave 1 slash wave A placed at the wave 2 slash wave B low. We went well past the 78.6% retracement. That's going to give an equal legs target of 197 for Shopify. So let's zoom into this weekly. I pretty clearly explained the monthly. So we're going to look at the weekly right now. And I'm actually going to delete this. I think from this low, this is, I'm going to move this out a little out of the way. I think from this low, this is a wave 1 and a wave 2. This is wave 3, wave 4, and wave 5. So the other way to do that would say, this is wave 1. This is wave 2. This is wave 3. This is wave 4. And this is wave 5. Looking at this RSI, 68.42. And yes, we did have a wave 5 that ends with momentum divergence. So, whether or not this is wave 1 and wave 2, this is wave 3 and wave 4 and wave 5, I think it's inconsequential, but for the purist, probably wave 1 and wave 2. The way to check for sure, take the length of wave 1, place it at the wave 2 low. Wave 3 usually, wave 3 is usually the biggest wave. So some wave theorist might say this is a leading diagonal, and so wave 3 doesn't have to be the biggest wave. I think that's correct. Is this the cleanest trend line? Maybe not. So a more accurate way to subdivide it, and really, wave theorists getting in arguments about the subdivision of waves instead of what's actually the practical count, is why this is kind of seen as the more voodoo side of technical analysis, except for, of course, when I do it. And when it's done right, Algo 382, Paul, very good Elliott Wave practitioner. Knox Ridley, very good Elliott Wave practitioner, very good at getting those fibs on the charts and really being technical about it. A little more abstract account. Elliott Wave is art. I'm a pretty, I like some of his work too. But anyway, everyone knows I'm the best TA on Finchwood. It's interesting that I come from the Elliott Wave family because we're kind of seen as the quirky kids on the block, but we get all the ladies, you know what I mean? So 1, 2, 3, 4, 5, wave 1, and A, B, C correction, wave 2, and then I believe from this low, another wave 1 and another wave 2. And so, I've kind of graduated from being the best TA on Finchwood. I want to be, and I think I am, currently at least, the best quant on Finchwood. I really think I've cemented my title potentially as the best technical analyst in the world. I know that's hard to see right now, but I do believe that the history is going to see no one's ever been as uncannily accurate predicting the stock market as me. I've really disproven the random walk across so many sectors. It's kind of unbelievable. But anyway, speaking with Shopify, look at this. I think this is going to be another one for the case where all forms of TA, besides Elliott Wave, and besides my quantitative analysis where I saw the institutions buying the 61 strike straddle, they're going to say this is a downtrend. This is not something to root for, I would think. So this high is 91.57. This low is 45.50. And we can see Shopify is between the 61.8 to 78.6% retracement, a ripe place to end this wave 2 correction and begin a wave 3. So how are the downside levels defined? Well, I've talked about how this is too wide of 45.50. So where's the real kind of technical nature? Why is Elliott Wave not really voodoo, especially not in the 21st century? It's because what a lot of people like to forget, the stock market's controlled by high frequency trading algorithms. Elliott Wave simply understands how these trading algorithms are most likely to be programmed, essentially. So, and it's done to great avail. It's done to great avail by the researchers, and the LA wave principles are very well understood. We're going to see them in practice, I believe. Once again, 91.57 or 91.57 is this high. This low is 72.64. 91.57, 72.64, and this high is 83.39. So we see Shopify is between the 100 to 161.8% extension of the length of wave A. Placed at the wave B high, which is where wave C ends. I believe 52.67 will hold. And that Shopify is going to, in the way big picture, hold above 45.50, before the more practical picture, hold above 52.67, end an ABC correction, not break below the 161.8% extension of the length of wave A, placed at the wave B high, being where wave C ends, and Shop will begin a wave 3. Let's look at Invitation Homes. The institutions were buying the 35 strike straddle on Invitation Homes. I think this is a pretty clean count. Once again, look at this weekly RSI. 1, 2, and wave 3, highest high on the weekly RSI. Very clear, very clean to see what the subdivision is. Not really any debate here. A shallow wave 4 and a wave 5 that ends with momentum divergence. Let me make sure that's accurate. 77.85, 77.27. Yes, very clean momentum divergence for wave 5. And really the big thing is there a clear 5 waves subdivision that's in price that the RSI is also confirming, but when it's that super distinct wave 1, wave 2, wave 3 is the biggest wave. There's a shallow wave 4 and a wave 5 that ends with momentum divergence. That's when there's very clear signs of an impulse. So from this high, let's see, that would be too big of a wave A. So this whole 5 waves impulse, 1, 2, 3, 4, 5 waves, is either a large wave 1 or it's a large wave A. For all practical purposes, it doesn't matter. And I'll talk about why. That's really just because of the Elliott wave concept of incompletion. So it's a 5-3-5 sequence. Actually, it's probably more of the idea of a 5-3-5 sequence. Incompletion is technically when, or if, Invitation Homes goes and it breaks above this high. If Invitation Homes goes and breaks above 45.80, then the technical term would be that it is incomplete until it reaches the equal legs target. The equal legs target is found by taking the length of wave 1 or wave A, placing it at the wave 2/wave B low, for downtrends, the wave 2/wave B high, and that is called the equal legs target for wave 3/wave C. So let's say that Invitation Homes went and broke above this high of 45.80, it would be said to be incomplete, because in Elliott wave theory, wave 3/wave C is at least the length of wave 1/wave A, placed at the wave 2/wave B low. And wave C and wave 3 are said to be quote unquote confirmed when the wave 1/wave A high is broken. So should Invitation Homes go and break above that high of 45-ish, then the incomplete equal legs target would be the length of wave 1 placed at the wave 2 low. Let me make that a little more perfect. Make that a little more wide. The length of wave 1 placed at the wave 2 low gives a wave 3 slash wave C target of 58.60. Now, I am actually not going to wait for all of the real estate stocks to make a base breakout. I've invested in RQI. I've also invested in SRHR, but mostly RQI, the Cohen and Steers closed-end fund for real estate. I've invested in that, and so I'm not waiting for real estate, all these real estate stocks to go round out this base and break a new high. I expect this is 1, 2, 3, 4, 5 waves up. Wave 1, wave A. This is an ABC correction. Wave 2, wave B. And we're going to see real estate like Invitation Homes go begin wave 3 and wave C. And that's why the institutions are buying the 35 strike straddle on Invitation Homes. Looking at the retracements and the downside levels, one way to find it in this instance is taking the retracements of wave 1 from this low. 35.69 is the high, 28.49 is the low. Let's see if I remember that bottom number right. 28.49, not 29.49, close. So that's going to be the wide invalidation. And the 78.6% retracement of 30.03 is going to be the tight invalidation. So I'm looking for the reason the 35 strike straddle is being bought on Invitation Homes is because it's going to hold above 30.03, and with many real estate stocks start heading towards the equal legs target, which for this stock is 58.60. That's why one of the reasons why I invest in RQI and other real estate related names that I'm bullish. Let's look at Planet Fitness. Straddles were being bought on Planet Fitness. I think the long-term chart of this is just really beautiful, so I'm going to spend a little bit of time on it. It's a great example of the concept of degrees in Elliott wave theory. So normally the largest degree is actually labeled with black numbers. I think that this is a from the low from 2016. So one of the cool things about Elliott wave theory is that it sees this. It doesn't see this as old news. It doesn't see this as a random series of events. It sees this as part of a journey that in many ways, more or less, was programmed in advance, whether it's by computers or by some divine entity. I think for the stock market, there's a lot of evidence that it's computers, and the computers can be quite good at pretending to be a divine entity, but they are just computers at the end of the day, likely controlled by human beings. But anyway, we look at this very clean. Look at this RSI. Once again, the monthly RSI. 1, 2, wave 3, highest high on the RSI, a shallow wave 4, and then wave 5. Look right here. Shallow wave 4, wave 5 ends with momentum divergence. So this is a large wave 1 / wave A. 5 waves up very clearly. And then this is an ABC correction during the pandemic that ends wave 2 / wave B. And to measure it just real quick, I won't be perfect to save time. We can see wave 2 / wave B ends right below the 78.6% retracement. That just helps show that this all corrected this entire cycle. 1, 2, 3, 4, 5 waves up, an ABC correction past the 78.6% retracement. Now we're going to look at the weekly chart. This is a good example of what's called a leading diagonal in Elliott wave theory. So one of the principles that's commonly cited is that wave 4 can't or does not break the wave 1 high. It retests the wave 1 high. I believe the real principle is that wave 4 retests the wave 1 high. This law that wave 4 never ever breaches the wave 1 high is ridiculous. It's not true, and it really is going to wreck a lot of people because they don't understand that when something isn't a wave 4 correction because the correction's a little too deep, a lot of times that means it's a wave 2 correction, which is actually a lot more bullish than a wave 4 correction ending. And for the bear case, it can work the other way too, where if someone's saying, oh, that can't be a wave 4 correction to the upside, so there's no wave 5 to the downside because the wave 4 correction was too high. Well, maybe the wave 4 correction was too high because it's actually a wave 2. And so there actually can be a move to the downside. It's not going to be a wave 5. It's going to be a wave 3. So understanding that that's just kind of a very misunderstood rule, that wave 4 never breaks the wave 1 high. I think it's important to understand a little bit of an advanced concept. But let's look at this high, very clean diagonal from Planet Fitness. I just thought this was a pretty count. And then 1, 2, 3, 4, 5. So wave 4 does break the wave 1 high, but it's because it's part of a leading diagonal, which is one of the most important exceptions to that rule. From this high, this is going to throw a lot of people for a loop. But if we look at this, the length of this move, place of this low, is exactly where that ends. Now, the purists in Elliott wave theory are going to call this, actually I don't think this would be a WXY, because this is 1, 2, 3, 4, 5, or it's 1, 2, 3, 4, 5. That might be, a little bit of mumbo jumbo. I usually don't distinguish between an ABC and a WXY because it's just a little too confusing to explain the difference usually. And also just because it's not normally consequential unless, I just kind of normally know what the consequence is. If this is a W, this is an X, and this is a Y. The only difference is that wave Y is never really supposed to go past the 161.8% extension, and that doesn't really matter for value stocks per se, like Planet Fitness, but for growth stocks, that can be an important thing to know. Anyway, and speaking of, I made this a little too big. These A's a little too big, so I'll make this a little bigger. So it's clearly the biggest wave. A, B, C. A little clunky right here with these big letters. But yeah, Planet Fitness. So while we're on the subject of Planet Fitness, before we get into Bitcoin and Tesla, I do want to touch a little bit on some things that might be called conspiracies. There was this big solar storm that was prepared. I don't know if it's a big thing. I don't know if it actually matters. But there was a big solar storm warning that was issued by the NOAA or something like that. Big solar storm, biggest one since 2005. Some people think it might be the biggest one since the Carrington event a couple hundred years ago. But anyway, the idea that the power grid could go down, or whatever, electronic communication services, the internet could go down because of whatever reason, natural disaster, solar storms. I'll tell you that there's two things I've actually done in real life to prepare for a lot of the things that I talk about. One, I didn't get the jab. I didn't get the Pfizer or the Moderna jab. So that would be one implication. Another would be that I moved out of one of the biggest earthquake hot zones that I talk about in some of my other posts. I actually moved out of that area completely, way far away from that. And the third is that just on the idea that, power grids could go down, bank runs could happen, the internet could go down. I've taken out a substantial amount of cash from my bank, and I've broken up $20 and $100 bills into smaller $5 or $1 bills, because I think that if the power went down and the internet, whatever communication services went down, we would still be on the US dollar system, and it would just be a matter of who actually has US dollars on them. Maybe ATMs don't work or whatever. Maybe it's because of solar storms. Maybe it's because of bricks. Maybe it's because of, a natural disaster, whatever. But anyway, I have moved out of the big earthquake zones that I talked about in some of my posts, and I've gotten some cash set aside. So for Planet Fitness, I think this is a wave 1 and a wave 2. And from this low, we see a wave 2 ended between the 61.8 to 78.6% retracement. I think this high is 75.86. And this low is 44.13. So that is going to give an invalidation of 54.35. And wave 3 should be at least the length of wave 1, placed at the wave 2 low. So anyway, that is Planet Fitness. In the big picture, what's some evidence that's given when Planet Fitness, did break this wave 1/wave A high? Well, it's that it's considered to be incomplete until the length of wave 1 placed at the wave 2 low is reached. And I don't believe that's happened yet. Oh no, it did hit. It was perfectly hit. Boom, look at that equal legs hit. Anyway, I believe this is wave 1 and wave A, this is wave 2 and wave B, and then from this low, this is another wave 1 subdivided into 1, 2, 3, 4, 5 waves. Really, to make it more clean, I think the more accurate way is just to say this is wave 1. Probably best to make it a different color. This is wave 2. And I'm looking for a wave 3 to begin on this degree. And also for 54.35 to hold, and a wave 1, wave 2, wave 3 to begin on that degree as well. Let's look at Tesla real quick. Really, there were a few things that I wanted to talk about with Tesla. Real quick, new ETF from YieldMax. I'm considering investing in this one. It claims that it shorts Tesla. I don't think that's actually what it does. CRSH from YieldMax. Really, if we look at this, it says that it runs a synthetic, what's it called? What do they call this? They call this the short Tesla option income strategy. We'll see. What the short Tesla option income strategy is an actively managed ETF that seeks to generate monthly income from a synthetic covered put strategy while providing indirect short exposure to the price of Tesla. So that's what they say. I think that there's a chance that this ETF does well, even if Tesla rallies. I know that sounds crazy. If we actually look at what's going on here And by the way, that expense ratio of 0.99, not to be sneezed at. I own TSLY, I own Tesla, and I'm going to buy TSLP, which runs a very similar synthetic out of the money covered call strategy as TSLY, but it does it with the Curve fund family. So that's TSLP. So that could potentially give me two dividends a month from Tesla running the synthetic out of the money covered call through ETFs. Now, this is a synthetic put. What do they call it again? A synthetic. They call this a synthetic covered put strategy. So if we look at what this fund is actually doing, it's buying an at the money. It's buying an at the money put with a 50 strike delta that expires in with a negative 50 delta that expires in 3 months, and then it's selling. It's selling a call that's also at the money that has a delta of 50, but because it's being sold, it's another negative 50. Negative 50 plus negative 50 is negative 100. So that's where they claim they're getting this negative 100 synthetic short, and then they're selling a covered put against that. So we can see down here in their holdings, here is the 180 call that they're buying for 719. They pair it with the 180 put for 719. That gives them their negative 100 short exposure, and then we can see these puts that they are selling. They're selling out of the money puts against this. They're selling the 135 strike put that expires. They're selling the the 162.5 put that expires 5/24. They're also selling the 175 put. So what do both of those sold puts do? Well, they give a positive delta because they're selling a put. A put's got a negative delta. A negative plus a negative is a positive. So here we see they're selling 2 rounds of out of the money puts. And what are they also doing? Well, to hedge that call that they're selling, they're buying the 265 call for 719. That's also making the delta more positive. So I believe that what's actually going on in this ETF are two strategies. The first is that it's called a call. It's called a credit spread, essentially. Yeah, it's called a credit spread. That's the call credit spread. They're selling an at the money call, and then they're buying an out of the money call. So we can see they're selling this 180. They're selling this 180 call. They're selling this 180 call for 719, and then what are they doing to hedge? To hedge that, they're buying this 265 call for 719. That's called a call credit spread. Now, what are they also doing? They're also taking a put debit spread, a completely different strategy. It's a completely different strategy called a put debit spread. They're buying an at the money put, and then they're buying an at the money put that expires in 3 months, and then those are going to expire. Those are going to have much less decay than the out of the money puts that expire in a few weeks for 510 and 524. So that's called a put debit spread, because as the put gets deeper and deeper in the money, the delta becomes negative 100. It becomes the same as owning, is being short 100 shares of stock. So that's where they can sell these puts, and they're covered because they have the short position to cover them. So I believe this is actually a put debit spread paired with a call credit spread. And I believe that this is really just a premium collecting machine from Tesla's super liquid, super volatile options market. I mean, even seeing that the hedge is 265, they're selling so many out of the money puts to lower that delta and to make the delta more positive. They're selling puts, and they're buying a call to make it a more positive delta. I think that I'm planning on possibly buying this ETF, is a more roundabout way of saying that I'm going to closely monitor the performance. I own Tesla. I'm probably going to buy TSLP, and I'm even thinking about adding this ETF after monitoring the performance and seeing, does it make money on its own, even when Tesla rallies. So is Tesla going to rally? And what's the yield on this going to be? Selling an at the money call, selling so many out of the money puts on Tesla, I have to imagine the premium is going to be quite juicy. Yes, even juicier than Tesla and TSLP. Anyway, let's get back to reality. Wave 1, Wave 2, Wave 3. Highest high on the monthly RSI for Tesla. A shallow Wave 4 and a Wave 5 that ends with momentum divergence and an ABC correction that goes past the 78.6% retracement from this low. From this low. 1, 2, 3, 4, 5 waves up. And I believe this is an ABC correction. So 138.30 is still the invalidation. It's getting a little more useful as Tesla pulls back against it. And what I'm expecting is that Tesla is going to go wave 1, ABC wave 2, and enter a wave 3. Now, from this low, if next week Tesla's a little red, I'll just tell you what the Elliott wave is going to say. The Elliott wave is going to say from this low, this is a wave 1, and this is an A, B, and then looking for a C correction from that high. So that's found by taking the Fibonacci extensions. Tesla is not quite at the 100% extension yet, but I did want to give you guys this box. So I'm going to get these levels pretty defined for Tesla in the short term. $187.56. This high is 198.87. And this low is 176.02. This low is 176.02. So we're not quite at the 100% extension yet, but this is the box. I don't believe, I'll tell you right now, my bias is that I don't believe this gap is going to ever be filled. I don't believe this high of 147.26 will ever be reached, and that this is going to go down in Tesla's chart history as a weekly breakaway gap, and that we are going to see, that's just my opinion, that this impulse from here is a wave 1. Tesla is going to end this A, B, C correction. Maybe it will truncate a wave C. A truncated wave C just means it doesn't reach that 100% extension. People, have their hands out waiting for that dip, and it never comes. They certainly exist, but I did want to give you guys that by the book zone for next week for wave C to end. That's going to give a little tighter invalidation of 150. So this is a really small time frame. I'll give it the 60-minute hourly invalidation because these are hourly candles. Wave 1, ABC wave 2. I own Tesla. I own Tesla. I'm going to buy TSLP, and I may even monitor the performance of CRSH and collect some more juicy dividend premium from Tesla, and also maybe even have a strategy that is called a low variance strategy. It doesn't really matter if Tesla's going up or down. I could pair Tesla, TSLP, and CSRSH together, maybe one day, and be profiting from Tesla both ways. Kind of like being bisexual in an orgy. Anyway, let's look at Bitcoin. I think from this low, I own MSTY, I own CONY, and I own YBTC. I also own BITO. No, those aren't CIA activation codes. Those are stock tickers. I believe this is a large wave 1 and a wave 2. I've thoroughly smoked this. I 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 don't have a Discord, but I think this is a large wave 1 and a wave 2. This is another wave 1 and another wave 2. Looking at this weekly RSI, the highest reading is a wave 3, making the highest high, suggesting a wave 5 has not occurred. That's one reason I like YBTC, MSTY, and CONY as Bitcoin, is up here consolidating, luring in the bears, maybe chopping around a little bit. The premiums are very high, and I get to keep collecting those call premiums. And CONY, MSTY, and BITO in its own way also participate a little bit at least to the upside, not fully capping the gains, not fully selling at the money options. The one that sells closest at the money options is YBTC. But BITO, CONY, and MSTY, not as much coverage there. And a lot of that, whenever the options are called away, it's because the move to the upside has been so big that it's usually just comes back in the form of the dividend from the option premium. So I am still long BITO. I added on to MSTY this week. I even added a little bit into CONY this week, even though that's one of my biggest winning positions with NVDY. I'm looking for Bitcoin to hold above roughly 56,126. Go wave 1, wave 2. This is another 1, 2, wave 3, an ABC correction wave 4, and then a wave 5 higher to end this large wave 3.